Hey, rich friends, it's your girl Cha-Cha reporting live from the Money Mantra, and we are back with another Forex education video. I really want to help as many people as possible become independent and profitable traders. So if that's something that you'd like to do, make sure that you do subscribe to the channel. If you get to the end of this video and you find that it's helpful, give me a thumbs up, leave me a comment, but most importantly, let me know what you learned. So in today's quick video, we are going to be doing a GBPUSD trade breakdown from NFP week in December 2023. So I suggested this trade idea to my group chat and the students I am mentoring. If you are looking for mentorship, you can register. That link is down below in my description box. So this trade is actually a trade that hit stop loss. It was suggested for a buy, but the market went the opposite way. The recommended TP was about 40 pips, with a TP3 of 80 pips or a 1-to-2 risk to reward ratio. So this was the initial trade idea, and we're just going to look at it and see what went wrong. So where you see this purple line here is actually the entry candle. So I'm going to back it up. I want to let you guys know what I was thinking when I decided to get in for a buy. And then we're going to see what actually happened in the trade. So as we can see on my chart, I have a couple of different lines and they're telling us different things about the price. Now, what you'll notice is that the market will sometimes be going down, where you'll see a series of red candles like such. And then sometimes the market will be going up when you're seeing green candles. Now, as a trader, it's your job to be able to distinguish or determine when is the market going to sell or buy. Now, you won't always be right, but if you do read the news, you check your, excuse me, you check your technical indicators, you do have a better chance at being profitable. So the first thing that I like to look for if I'm looking for a buy is I like to see that my candles are above either one or both of these lines that are at the top of my chart. These are considered EMAs or trend lines. And I'm just going to zoom out so that you guys can see that typically when the market is above one or two of these lines, it tends to go up at a certain point. And we can see that also happening over here. Now I'm going to zoom out and show you what happens when the candles are below these lines. And you can see they're still above, market's still going up. And we're just going to find some sell examples. So here's an example here. We can see that the candles fell not only below one, but below both EMAs and it sold. We have the same thing happening here, right? So that's one of the confirmations that I like to look for when I'm getting into my trades. I ask myself, are the candles above or below the EMAs? Because that's really going to tell me a lot about the price and what I want to do. So I saw that the candles were above. So that was my first confirmation for a buy. And because they were actually above both lines, I consider that two confirmations. Now, before I take a trade, I like to look for multiple confirmations. I say 3 confirmations are good, 4 confirmations are great, and 5 confirmations are fantastic. So I had 2 so far. Now, when I move to the bottom of my chart, I have some more indicators or things that can actually confirm what I'm seeing on the chart above. So typically, I like the momentum line to be facing up, letting me know that the market is also going up. And again, I'll show you guys an example here. We see the momentum line going up. We see the market going up versus when we see the momentum line going down and the market simultaneously going down, right? These are not two different things. Our indicators are only confirming what we're seeing on the candles. So again, we have our 2 confirmations here. This is not facing up, but it is positive, which is a okay sign, but this is not going to be considered a confirmation for us. Now on our stochastic, which is our final indicator at the bottom, we do also see that it's facing up, which is something I look for if I'm going for a buy. I also like to see that this blue line is above this orange line, which we can see is happening here. So I have my 3 confirmations. Now, another thing you can look for on the stochastic is that one or both of these numbers are above 50, because the stochastic has 3 key levels: the 20 level, the 50 level, and the 80 level. So it's already crossed above 80. To me, it looked like the market was going to buy. So I set my take profit and my stop loss. And I'm just going to go ahead and show you guys what I did. All right, I set my TP above the previous high, because if the market is going up, it should be creating new highs and not lows. And then I set my stop loss a little bit below the previous low. So we're going to actually see what happened in this trade. Okay, the market went down. It got close to my stop loss. And then we can actually see within 12 or less than 12 hours, the stop loss was actually hit and the market continued to go down. Now, I'm not upset that this trade did not go in my favor. It did hit a stop loss of 40 pips, because we're not always going to be right once we take these trades. We can only analyze. You have to be a little bit robotic when it comes to trading, and don't be emotional, because as we can see, we had confirmations that would appear as if the market was buying. However, it still turned around and sold. Now, we're not going to cry over spilled milk. What we are going to do is move on to the next trade and stick to our trading plan. So I really hope that this was helpful and this was a thorough explanation. I hope that you guys take more care in your trades and that you continue to be productive and profitable. So if you have not already, make sure you subscribe to the channel, and I'll see you guys next time.